The meltdown isn't coming, it's already here. The question is, are you gonna be ready for it, or are you gonna be blindsided? In this video, I'm gonna show you exactly what's happening and how to prepare for it. All right, so the 2025 crash is on the way. And I know there's been people talking doom and gloom on this topic for quite a while. And I'm not trying to be one of those people. I just wanna talk to y'all about the facts. And I think it's pretty undeniable now. I think we've been feeling it for a while. I've definitely felt like I've been experiencing a recession for at least 4 or 5 years now. Pretty much since 2020, I've noticed that we're towards the end of the cycle, and the only thing next is a recession or a pullback. And I think we're at the stage where it starts to show up in the media. It starts to show up to most people. I feel like people that are not following this daily probably have not necessarily noticed until maybe this year or last year that, hey, this is inevitable. It's impossible to sustain what we've sustained for the last couple years. And the truth is, a lot of that was due to the Fed printing money. They just pumped more money in the system and thought that would solve all the problems. But as we're seeing today, it actually makes the problems that much worse. And so in today's video, I'm gonna break down really what I'm seeing and what I'm doing to prepare for this, and why it actually is a good thing in certain ways. Why I think it's a recession: one, being around for the last couple years and seeing what happened during 2020, where things just absolutely exploded when we thought everything was gonna crash. I mean, we saw that quick little drop in the stock market, and then all of a sudden it just absolutely took off. And so I'm sure a lot of people made a lot of money during that period. I just didn't think it was sustainable, so I kind of stayed on the sidelines, to be honest with you. Maybe that was a mistake, but I also wasn't looking for those get-rich-quick scenarios. I was really trying to find a way to build wealth. But, I mean, since that time, I mean, the amount of money that has been pumped into the system has to go somewhere. And so, we got it through stimulus. We got $2,000 or $3,000 of stimulus. People were making money without even working. And so these companies were, as close to going bankrupt as they could be. And they kind of just trekked along because the economy is really funded by the consumer for the most part. So we didn't see it in the stock market because we had so much stimulus going in. People were still spending money. It felt like things were good. We had more savings than we had had in a while. And so it felt like, okay, things might actually be improving. But then once the stimulus stopped, the jab and all the stuff went, kind of turned things normal again, where people were going out, spending. They decided they wanted to spend a lot of money. So people were basically blew all their savings, took all the money that they had earned in the stock market with their 401ks, and decided that realized that they were, or thought that they were rich, and so they went out and spent a bunch of money. So all these companies are reporting record-breaking stock prices because they're getting so much revenue from the pent-up demand that it looks like, this economy is just gonna go through another boom cycle. But it wasn't founded on good principles. It wasn't a good foundation, the economy. It was based on the Fed basically giving us the steroid shot of more money printing, and so it just kept going and kept going. But eventually it has to come crashing down, and typically when prices go up as much as they have, it's going to come crashing down. Very rarely can they make a soft landing. I know the Fed talks about it all the time, but I don't think it's ever happened in the history of this country. It's just just doesn't happen. Anyways, that's why I see it happening. And the next thing is, in a healthy economy, there are boom and bust cycles. That's how you kind of course correct from when all the bad money got into the system. And so it just kind of naturally is going to ebb and flow. That's a healthy economy. And so we have not had a healthy economy because we've had so much money printing that now it's just going to tank, because the market corrects itself. When prices get too high, the supply begins to increase, the demand lowers. It's just it equals itself out. It's always going to kind of ebb and flow like that. And the Fed just hasn't allowed it to have a normal market correction. And so now it's going to be worse. And because we're so addicted to the steroids of money printing, the fact that the Fed hasn't lowered rates is causing a lot of people that were investing in risky things or just being careless with their money to go bankrupt or, have to start over. That's really, Warren Buffett says, it's when the tide pulls in that you start to find out who's been swimming naked. And so that's what happens with a lot of these investments. And it's natural. It's a good thing. It's been taking so long because there's been so much stimulus that it's taken this much time to really get rid of all the extra money in the system. They're basically pulling all the money out at this point. That's what the rate increases do. And our rates aren't even very high. I mean, 6 to 7% is not crazy high by any long-term standard by any means. So we'll just have to see what happens. But that's where we're headed. Now, what am I doing to prepare for this? Well, I've been really investing a lot into education for sure. So watching videos like these is great. Watching videos like Robert Kiyosaki, Ken McElroy, George Gammon, these are all great people to listen to because they understand that the root cause of a lot of the pandemonium we've been through is that our dollar is being devalued. And so the reason that after 2008, all these assets went through the roof is because there was so much money printing and we went to near 0% interest rates that everything seemed to go up. And people are thinking that that's healthy, but it's not. It's not the fact that the assets themselves got more valuable. It's literally that our currency got devalued, so it makes everything more expensive. So how you prepare for it is you want to be the one owning those assets. That's the reason the rich get richer, is because they own these assets. They own the buildings. They own the land. They own everything these things that basically increase whenever the dollar gets devalued. So they always have an inherent value. Real estate's always going to have a value because people that need a place to live. People need a place for their business to operate. People want a good location. People want to be in a nice area for their kids. So real estate is always going to have an inherent value because it's a roof over your head. Gold also has value because it is rare. It's finite. You can only, there's only so much of it on earth, so it has an inherent value. Now dollars in themselves, because they are not backed by gold anymore. Richard Nixon took us off the gold standard in the 1970s, not backed by anything. So when you have a currency like that, the only value is because other people think it's valuable. It's an exchange. That's all currency is just a means to exchange. And it's not like you can exchange it for gold or anything like you could back in the 1970s. So you'll see that the amount of money that they just print out is so much more than they could redeem in gold. And so that's why Richard Nixon took us off the gold standard. But now you'll see there's so much more money in the system, and typical supply and demand, as the supply goes up, the demand goes down. And so that's why we're in so much debt. That's one of the reasons we're in so much debt, but also just our spending. But this affects the actual economies. It's a Marxist economy because when you have a central bank that is Marxist, that is communist. It's not capitalism at that point. We might think it is, but it's not. And so you can see in China they have more of a capitalist economy. They're a communist country, but they have a capitalist economy in that they're not necessarily following what our central bank is. They're actually trying to buy gold. Our central bank believes in our fiat currency and believes in spending on all these government programs and doing all these things that don't bring any income into the country. They don't encourage business. It actually discourages business. So you'll see what's kind of happening nowadays. So what I'm doing is learning as much as I can about business, learning about vending machines, laundromats. Obviously own some vending machines, so I'm just really digging in there to become one of the best at it so that I can scale my route and get more income through that. And then the next is learning about laundromats and investing there. And then next is to invest in real estate itself, because say I own the commercial building that the laundromat's in, that's even more valuable because that will always be there. That land will be there. That property, for the most part, will be there. So I'm trying to learn as much as I can about those three things. Those are real tangible assets. And then also, content, obviously, and just learning different things that can potentially earn some money. I don't make money from this or really from, the real estate stuff or laundromats yet, but it's all an investment. So I'm trying to learn as much as I can, and just, once you have the skills, then the money will come. So just try to learn as much as you can. Don't be one of those people that, chases the highest salary. Always try to see if, what you want to learn, find what will teach you the most along the way, and invest in those things. So that's really what I'm trying to do. And if you're interested in doing the same, please like, comment, subscribe, and I'll see you on the next one. Peace.